Good morning, good morning. How is everybody doing this morning? Happy Friday. What's up, Raj? Hey, Kevin. Sean, what's up, guys? Oh, Friday. And what a week it's been. Hey, RS. How you doing? If you're around right after the Globex call, I'll call you, RS. We'll do our one-on-one. Got hung up yesterday. Let's see what we got here. Hey, VS Squad. Arm Deep. Good morning, everyone who's joining us. Now, it's a little slow light right now, and what we're doing is let me just kind of talk real quickly. I thought um, I'm trying to improve the channel, and I'm trying to improve my content and things like that. So every day I go and I do a top down, like a large to small thing. Maybe before I do that, I'll tell you guys what's going on right away so you guys can get some info. Right away, we're just rotating between 31 and a half and 38 and 3/4. That's this balance right here because the market's waiting. The market will do that. Older traders say it's waiting for information, and really information is customers, right? So while we're waiting for customers, we're just bopping around between 31 and 38. So that way you guys know right away what's going on in the market. And then I'll get into the larger analysis so you can be aware of what's going on. Now, yesterday we had, oh, geez, this market. Well, we had a very elongated profile, okay? We have a gap. This gap means that shorts are trapped. That equals buying. Now, when you know that there is buying down here, and the next day the market can't get anywhere close to the gap fill, that's going to give you some useful information. Now, what is that useful information? That useful information is that there are buyers that are increasingly moving their buy orders up. When a market starts moving higher, the lows are higher, that means the buyers are chasing price higher, right? Now, why would they do that? Well, they would do that because they're trapped short. Why would they do it aggressively? Now, somebody was asking me to explain month end. Next week is month end, right? Next Tuesday is month end for equities. So that's T+1. Wednesday is the last trading day of the month. Okay? So you have today, Monday, Tuesday to try and cover your short. Otherwise, you're going to be offside. When you're offside, you got to cough up dough. And Wall Street's a place where money goes in, it doesn't come back out. So you're not going to get your money back out. So traders will either sell positions or manage positions or something to create the cash in order not to wire money. It's just the way we are. Okay? So, we got a short squeeze going into month end. After one of the most dramatic sell-offs the S&P has ever had, we actually have a short squeeze going into month end. Now, what is the limiting factor in a short squeeze? Is when people start to sell, right? So far, nobody has an excuse to sell because check this out. What are we doing for the last 4 trading sessions? We're one time framing higher on the daily. We did a look below and fail of 51.48. Then we did a look above and fail of 54.65, but we couldn't get any lower. So when the market can't get any lower, it's going to turn and rotate. Why is it going to turn and rotate? Because markets do that as a natural function of business, right? When markets run out of supply at these levels, they move higher to find sellers at higher levels. That's how money is made, right? Simple? Okay, good. Now, what do we do today? Today is overnight inventory is pretty much 100% long, which means almost 100% of the trading is above yesterday's close. This tells you where the bid is in the overnight. Why is it important to know where the bid is? Well, it tells you where the shorts are trapped. The latest time frame shorts are trapped here. Then we can go into the 1-minute chart to find out where the brand new shorts are trapped because they'll be support. Okay? We have single prints here, so we have a short position here. We have a short position here. We are building this market once again higher on short positions. Now, if you think that that is weak, go ahead and short it and we'll be up here. Because the more people who short this thing, we'll be up at 56.23 by the end of the month. Hell, we could even get there today. If there is enough people short here and there's enough people short here, it's like rocket fuel to push price up. Now, people don't understand that because they think short sellers lower a market. They don't. Short sellers sell something they own and try and buy it back cheaper. If they can't buy it back cheaper, they all have to go and buy it back at a higher price. They all go to buy at the same time. The sellers didn't just fall off the turnip truck. So as soon as I see that shorts are trying to buy, I'm going to raise price to take advantage, right? Now, people are going to say, how do they know that the shorts are trapped? Well, if you're managing $200 million and you can't figure out where shorts are trapped, you don't deserve to be managing $200 million. It's their job, right? Just like your surgeon knows where to cut you open, right? You have to have some sort of knowledge about the business in order to trade large money. Hey, Faye, good morning. How are you? So that's what we're looking at. We're in this zone now. We're above 65. The middle is 55.43 or 44. Let's call it 44. The top is 56.23. So do you notice how we kind of looked above that 44, right? We came above and we're back down. Let's see if we can stay above 44 as the morning progresses, because then your next target up is 55.84, which is a big, big, it's the top of this older time frame zone from 53.42 to 55.84. Okay, these levels here are on a shorter time frame. They still work. So we'll be looking for 55.84. If we can't get under 43, as RTH starts cooking up, the shorts are going to help push price higher. And that's not good for anyone. I don't like markets that are completely short, because what they do is they get slow and difficult to trade. Let's see what happens. 55.84 is the top, and 55.43 3/4 is the bottom. So generally, the way these markets trade, somewhere in the middle of this zone, there'll be some resistance. And there's not a lot of inventory above us. That old balance zone from 23 to 57.02, we're pretty close. Let's see what happens, folks. It's going to be an interesting month end. I really, really suggest new traders to trade less through the end of the month and do some watching. We've had a constant seller at the previous day high. I put that in our chat earlier before the session, right? Now those sellers are seeing buyers. I will be looking for this area right here. What is that? 45. I'll be looking for just under 46, just at 45 to see if we could get past that because that's where the last time sellers stepped in. Hey Dan, how you doing? I'm ready for the weekend. This market's gonna have to start exercising more to keep up with this market. by, by around the afternoon, look, it just went right through 45. Let's see if it gets over 46. Now, the zone I used is 31.5 to 38.75, and it worked pretty good because the overnight high is 53, and I had 53.25, so I'm off by a tick. Now, once we get over that previous day high, what happens? What are the mechanics of what's going on right now? This helps you understand. Once you take out the previous day high, the big shorts who don't use stops, right? What they'll do is they'll put buy orders here because that's where they were looking. Like little shorts would put their stop here. If you were short here, you'd put your stop at the yesterday's high. But larger traders don't put in a stop for like 150, 200 contracts. So what they do is when the market comes back here, they'll buy, 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 buy. So that's an area that we're going to look for as support when the market falls back in, right? And those are the mechanics that we use. Let's see. And then we'll try and put some trades together. So overnight inventory is, does anybody have the software open? Overnight inventory is long except for this little bit right here. These contracts right here underneath yesterday's close. So I would say overnight inventory is at least 98% long because 98% of the volume has traded above the previous day's close. So that means we're looking for a correction to that, right? A move lower. What is the market doing right now? It's going higher. So that is information. So when you understand what should happen in a market, right? And a lot of traders like Peter Resnicek and those guys say, when what you think should happen does not happen, you need to pay attention because the market's trying to say, hey, business is a little bit different this morning, right? So you guys have some situational awareness, right? So you know what the traffic is before you cross the street, right? That's what situational awareness is, right? So you want to know, hey, listen, overnight inventory is long, but we're not seeing any kind of correction. And look at the lows. Using a half hour, basically a TPO chart is just a fancy half hour candle chart, right? That lets you look inside the candles. So look at the lows. Look at these lows. They're all moving higher. So if overnight inventory is long and we are one time framing higher on a half hour chart, remember that song from the 80s, Things That Make You Go, hmm? You got to stop and think. Be careful on the short side on a Friday. Volume's not that heavy. It's around, what, 70,000 contracts? All of the short-term inventory. And what do I mean by that? People always ask me what inventory is. That's all of the product. Look at this, folks. All of the short-term inventory is underneath here, right? This is all your product for sale, all of this. So here you're selling it at profit. Why would you sell it down here unless you had to? Do you guys understand? Does that make sense? I'm trying to make it simple. So your analysis doesn't have to be 15 pages long when you start trading. Where are you? We're at 55.44. Where's all the inventory? It's all underneath 5504. So we are priced to sell product, right? At a profit? Yes? No? Cool. All right. Just checking. I know it's Friday. I know it's Friday. Right? I just want to make sure that you guys understand what's going on. There's nothing random about this. Right? People randomly do not open up orders for $20 million, $30 million and start trading just randomly. There's always an agenda in business. Right? Always remember that. So we have a seller at 46. What are we going to do now? This is how you keep from trading at the wrong time. Where's the short-term inventory now? The short-term inventory is all underneath 55.38, right? Here it is. And what are we doing here? We're quietly selling it here. Now, if we hold price steady long enough, buyers will come and we'll be able to do this. Right? If the buyers don't show up, we're going to have to put it on sale back down. So that's what we're looking for now. Right? I don't like trading in the middle. But say you're a short seller, right? And you're like really caffeinated, right? You've had like 3 espressos, a Red Bull, you've got a battery, a 12-volt battery hooked up to your tongue, right? And you just gotta take a trade. Well, if you're short, put your stop above 46, right? If you're a big spender, right? Because remember, I said I'm not going to preach. I'm going to tell you where to put your stops if you have to trade. So if you are a short seller, you want to have 46 as your backup. If that seller at 46 is gone, be scared. The next area where you'd have your danger zone is there at 48, just under 48. See how that 46 seller is leaving you, right? So if you were short here and your seller goes away, you're in trouble. The next area where there were sellers were here. This is a way you can actually trade and have some sort of intelligence about what's going on other than all this random stuff, right? And there's your last line of defense is 55.50. Do you guys see that? So you have sellers at these different levels, and if those sellers abandon you, then your business reason for the short trade goes away. Now, there's 3 levels there, so depending on how much money you have on your account and how much you're willing to risk on this particular business idea that you've got, that you should be short, then you can use one of those 3 levels as a get out of jail free card. Well, not free, you're going to get hit with a little bit of a stop loss, but at least this way you have an idea that you're not just shorting and shorting and shorting. Does that help? No? Yes? Good. Because if that seller, pretend that seller is like your backup in a bar fight, right? If you turn around, right, and your backup is off talking to a girl, and you just challenge 3 guys to a fight, you're going to get your clock cleaned. So, unless you're Bruce Lee or something, right? So, watch out for where the sellers are if you're short. Because if those sellers see buyers, it's like when the sellers see buyers, it's like your backup in a bar fight sees a pretty girl. They leave you. Now your backup is gone. See? Think about it that way. So how much are you willing to risk on this business idea? If you're short at 44, right? You're short at 44, all the inventory is underneath you. You know the agenda of the market is to take that inventory and sell it for as much as they can for as long as they can. Right? So you're going against the agenda of the market at this present time by shorting it. Does that make sense? Because if you can visualize what's going on, I guarantee you're going to take less stupid trades, right? Or FOMO and all that stupidity, right? That's just bad business, right? Oh, that's a good question. If smart money are smart, how can they be trapped short? Because there's all different kinds of smart money, RS Trader. There's really smart money, and then there's people who have really good sales skills and are good at raising capital from investors because they look the part, they dress the part, they sound very educated. But they don't always make money. And those hedge funds go out of business. Happens all the time. And even the smartest traders will make bad decisions. It happens. It's not like it's not like they're robots, right? They're just like you and me. It's very easy to get trapped short in these markets. The reason why people get trapped short in this market is because they don't understand something called structure. When you take a company public, you structure the company. How much authorized stock? What's outstanding? What do we sell to investors? What actually goes into the depository trust system? That's called the float, or in the old days it was called floating supply. Capital markets in the United States are structured a certain way. They are structured to deliberately have a lack of supply. Large positions in Apple, Microsoft, Tesla are all held by massively funded money managers who paid for the stock in cash. So it's never subject to margin call. That's why the market after COVID hit new highs, because none of the active money managers sold any Apple, any Microsoft, any Tesla. Check the 13Fs. We'll be looking for them soon. They'll be coming out. Okay, we got a seller at 49. See, the sellers here have moved down here. Do you see that? And they're just waiting for buyers to show up. It's really quite amazing at Globex how much information these 1 minute charts will give you. It's absolutely fascinating. Watch. That's your next level. So at every single level where we were supposed to have a seller, those sellers saw buyers and started to raise price. Wouldn't you? If you had 100 contracts for sale and you were selling them at 47 and 3/4, and somebody came along and said, hey, Raj, I'll pay you 48. You're going to go, no, I'll sell it to you here. No, you're going to sell it up here, right? Because your job is to maximize profits in business. So the chart is telling you how sales are going. See, it went up there for just a tick, and then the sellers came back in, right? I would not short this right here, right, based on that, but it tells you good information. Now, if we get underneath 47, right, if we can get underneath 47 and a half, then we can gun for 46, but there's not enough meat on the bone for me to short it. And this is practical information that you can use when you're taking trades, because that way you actually can understand what the market's doing. None of this is random, right? None of this is like smoke and mirrors. It's just all the movement of product. And the wholesale traders and the market makers are pricing their product according to the amount of customers that are coming into the store. Customers are order flow. Order flow is just a fancy way right? A Wall Street marketing way to talk about customers, right? That's all it is. Now, London's going to open in 3 minutes. Let's see what kind of customers come in the store when London opens. It's been a long week. Hopefully, you folks can start internalizing some of these concepts because they're really going to help you when you're actually in the heat of battle, right? It'll keep you from overtrading, right? It'll keep you from trading at the wrong time. It'll keep you from taking, fantasy trades, those Hail Mary trades that you guys take, right? When you understand there's a business reason why I'm doing a transaction, and if that business reason's not present, there's no reason for me to be in that transaction. Right? Very simple. Right? And if you can keep the analysis simple, then you'll be able to actually work on your execution. Right? And execution is a lifelong process. Unfortunately, execution does not all of a sudden just get good and stay good. You got to work on it continuously. And just when you start executing well, the market changes, right? Oh, you got a holiday. Hey, Dave. Holiday down under? Cool. One of these days I'll visit you in Australia. Come down there and find myself a nice Ford Falcon. Mad Max style. No, like a 73 Ford Falcon, Mike. You know the car that he had in Mad Max? No Yugos. I can tell you're not a car guy. uh, okay. So this chop, right? This chop that you see here, that is, you know, this is distribution, balance. So for scalpers, it's a big do not trade this. Now, a lot of larger traders will go, you know what? Right? I'm a big shooter. I'm going to build a short position here, use this as my stop, and then put some bids down here. So if you are building a short position here, that's your really, that's your danger zone. And that's, you know, if it takes out the 53, 54s, well, there's no pleasing you. You got to manage your positions, right? Let's see what London does. Now, so far, we haven't had those big kooky candles, right? So say you're shorting the 46s, right? As we come down to 45, put a bid in, like say if you're short a couple of micros at 46. I'd put a 44 and 3/4 bid in to see if you get hit. Because if you don't get hit at 43 and 44 and 3/4, it's going to have a hell of a time breaking 45. And this way you can manage your risk, right? And your outs here. Your outs the top here. Right? You take your licks at 48, you're gone. Right? If you're a small trader. And it would have just taken your stop and then dropped and everybody would be pissed. Get some new information though. Now you know that seller's right there. This is very difficult to trade for scalpers because what you have to do is you have to establish a rotation and only trade from the inside, from the outside in. Your upper stops are going to be at 49 and a half. Not the greatest trading here off the London Open. Let's see how far they could push this short position. The trades I like to take are when we do the look below and fail. So you buy some here, put your stop here, and sell into this strength. I like that trade. Then I like to look above and fail, but I like trading from the edges. Here it's very difficult to get a good read on it. And your accuracy is tough because the order flow in the middle of a zone sometimes is very, very unpredictable, like it is right now. Once again, I'm really short biased. But the market is kind of tapping me on the shoulder and going, hey, maybe cool your jets on the short because we're still in the front end of the move, right? We are still in the front end of the move. I haven't seen this yet, and I always want to wait for this to short. The reason why I'm short biased is because inventory is long, right? But once again, I have to remember what did I say last year and the year before. This market has a horrible habit of running out of supply just when everybody gets short, right? This market has a horrible, horrible habit of running out of supply. Just when everybody gets short, all of a sudden the supply is gone and it rips. And it's been happening now for the last 3 or 4 days, and there's a lot of people trapped short. How convenient, right? Yeah, you have to be open to changing your bias, especially if the chart is telling you, you know, especially if the chart is telling you that your bias is wrong. One of the hardest things I had to learn how to do is trade against my bias. And that's why I came up with the system that I use. And even with the system, sometimes you catch yourself. So the selling just shuts off under 45. It just shuts off right here. So now we have this balance. This is the distribution balance. We're selling this product up here. Yeah, got to put some levels above. Let's go put them in just in case. So that's balance times 2, and then you just times 4. Very simple. It's that like little barcode. It looks like a barcode on a cereal box. That's just you don't want to trade that. You just do not want to trade that. Where's the point of control? Overnight point of control is down here, right? At 55.30, and it's around 1,417 contracts. Well, we still have a ways to go to move. We need one of these ticks. We need to put another 1,000 contracts at to move the value area up, which is the cost basis up, which means good distribution. But so far, every time we get close to that W high to yesterday's high, the selling stops and the market rotates back up. So you know there are bids underneath 55.44 for now, at this time. Any questions? No? Yes? Okay. I think everyone's in weekend mode, right? Quiet market. Alrighty. How come month end usually trends upwards? Great question. Because most of the people, right, this business is based on OPM, other people's money, right? Fund managers, hedge fund managers, money managers, portfolio managers, what do? They manage other people's money and they always want to show a return, right? That's why a lot of traders will high close a stock on a Friday. So when people look at their portfolio on the weekend, over month end, quarter end, year end, they're happy, right? Nobody wants to have a down month, down quarter, right? Because if you do start having down quarters, your investors will leave you. Does that make sense? The business, like nobody actually works on Wall Street for a salary. People get a salary, but that's not why they show up to work. They show up for the bonus. Coming down to that previous day high, right? Does that make sense, Dylan? It's a pay for performance industry. So the more you earn for your clients, the more you make for yourself. So you tend to mark up positions at the end of a month, end of a quarter, end of a year, right? Otherwise, nobody wants to have their money with a fund manager who doesn't make money. right? Now, of course, month ends are usually they try to get the the prices higher by not selling, but it's all dependent on the order flows. Like sometimes, it's not guaranteed that every month end is going to be up, right? And if it's not, it means that there's something different that's occurring in the business. Remember, anytime the normal course of business doesn't happen, the market is trying to tell you that something is different, right? Something is changing in the business. That's why sometimes you got to sit and watch a market and just instead of just trading and trading and trading and not paying attention. Let's see if we bid at 41. If we get under 41, we'll come back to 38 and 3/4. That's the short I wanted, but was way too early. Way too early. So when you're early on a short, what does that mean? Like, you know how you short a market and like 5 minutes later, 10 minutes later, all it does exactly what you thought it was going to do? And it really pisses everybody off? What does that mean? Right? So I shorted here, got stopped out here, and then it broke like 7, 8 minutes later. Look at that. Beautiful. All the way back down to VWAP. So if you're trading and you're shorting and getting stopped out, it means they have not trapped enough longs here to create that selling competition to go lower. So it's a timing thing. And once you really get tuned in, you can help time your trades. You short a few, you get stopped out, and you go, oh, I gotta wait. I gotta wait. I'm too early, right? So you can have, once again, you have some sort of what we call, Dalton and those guys call it market generated MGI, right? Market generated information. I like to call it intelligence, right? So sellers finally needed to compete and they bashed the price all the way back down to their cost basis. Now, if the selling is really, really harsh, we'll come back to this 55.24. So if you're still short from say 40, 41, 44, and we can't get above VWAP, right? If we can't get back above VWAP like we are now, the market is going to rotate back down. Right? This is the trade that I wanted, but I was too early on. Right? And we'll come back down to this area here. We took all the lower stops. So inventory is finally correcting lower. Let's see where it stops. Took out that E low by 1 tick. And now rotating back up. So now, if you were short, you should have covered some here, right? What makes it healthy? Markets are supposed to be two-sided, Travis, right? So when you have a market that does not liquidate, it's like going into Safeway and you want to buy bananas and they go no. Kind of strange, right? The market exists to sell you something. So when the price keeps going higher and higher and higher and the volume of business gets lower and lower and lower, that's not healthy. Nice look below and fail of 31.5. There's going to be a seller at 36. There they are. Does that make sense, Travis? Because it's a market, right? A market, you're supposed to be able to walk in there and buy something, right? No, no, no. Don't be sorry. It's good that you ask these questions because we have a whole bunch of different people on in the morning that may not be. Look at that, right back up to 38. So what does that tell you, right? A quick sale brought in buyers. Now we're just going to we'll do that back and forth in the blue zone now. Very interesting. Holding 31.5, should be a seller at VWAP. Now what's going to happen is we are going to draw this volume out down here, right? Accumulation, distribution, back on sale, buy it back, and then try and do this again, right? If we can't get any sellers, we'll mark it down, okay? Reason being, we are getting rid of the inventory from yesterday. Yesterday's point of control, the inventory from yesterday is priced here between 54.93 and 5500. And we are selling that up here at 55.32 to 55.50. So they're still making a good profit. Right? You need liquidation in a market. A market without liquidation is basically like, you're going into whatever grocery store and how much is an apple? $500. Like, what? Liquidation is good. Don't you notice, Travis, that after a market sells off, the price action's a little better, a little bit more smooth? It's like WD-40, right? Liquidation is the grease that keeps the wheels of business, the wheels of commerce turning. Is there a way to tell that buying is not short covering? Well, it doesn't really matter, but I'll tell you how this works, okay? When a market liquidates, okay, the first people to come and buy here on these red candles were shorts. Why is that? Because they're closing a position. And then longs build a position on top. And then we come in and we sell into the strength, right? So there's a sequence of events. When a market sells off, the first people to come in and buy are smart money shorts who are covering, right? Then when the wholesalers see their buy orders, they come in and bid the market. Then we come in, right? Us and momentum traders, the fourth set of buyers who cause this big candle are the dumb money shorts who short here. They come in and then that's why we get that rip. And then these people sell into that rip for profit. So that's the sequence. There's a sequence. And it's been going on for centuries, right? The first people to come in and buy are the smart money shorts. So the people who are building a short position between 44 and 48, they'll step in and start buying that 55.31, 32 under VWAP. Beautiful cover, right? If you were short 20, 30 contracts between 44 and 48, shorts create support. Longs use the shorts as leverage to buy because they know, hey, wouldn't you like to know, Arm Deep, if you're buying something at $5, wouldn't you feel comfortable knowing that someone's bid 1 million shares at 450? That'll make you feel better buying it at 5, right? Because there's a big buyer underneath you supporting it, right? There you go. Same thing's happening here, right? And why would shorts be buying at this level? Because there's a standard deviation there. That's where the 0 and 1 mafia will start putting in their buy orders. So we take advantage of that sequence of events. As soon as we see that price stability, then we can do the look below and fail trade, which takes advantage of that business transaction. Exactly, Harry. Ran out of, yeah, at 44, the sellers ran out of buyers, so they chased the buyers out of the store, gave them a good price under 31. Shorts came in and covered, cut the supply, rip the market back up to 38, sell it back down to 31, cut the supply. Now we're above 35. So the chart is just showing you the movement of inventory. So if you're long, if you did a look below and fail of 31, say you're long 32, 33, you put some offers out at 35, 36, 37, 38 and sell into it as the market goes up. Cool. No problem. My pleasure. Good questions. Good questions, folks. So right now, we've got a little bit of a rotation. Notice that we had a rotation here. That was a distribution rotation. This is an accumulation rotation. What are we rotating? Inventory. Yeah, they're working the range. Exactly. Exactly. Hey, John. Not much. We've had a short squeeze for the last couple of days. Going into the weekend, when control moved up a little bit. Yeah. Well, folks, geez, it's been an interesting week. Gosh, it's been a crazy month. questions? Alrighty, folks. It's a bit slow. Hope you learned something tonight. Kind of cruise into the weekend here. Have a great weekend, everybody. If I don't see you in RTH, and have a wonderful weekend. Be safe out there. Enjoy the sun. Thanks, Travis. Thank you, everyone. And we will see you on Monday. And the rest of you folks will see at 9 a.m. Thanks. Bye for now.